how to trade a strong range breakout chance. So we've already seen further up the chart, we've seen the strong increasing in sentiment leading to the ultimate reversal, and further down the trade view window, the increasing bull sentiment leading to bear reversal. Well, this is the middle part. Okay, so this is where the breakouts are going to start. So the market's consolidated, and the markets are looking for that new push in direction. Okay, so these can be also very, very good trades if you tie up the what the iView bias is telling you with the other kind of fundamentals in the market and the other technicals that we draw over the market. So let's take a look at the pound versus the New Zealand dollar. Okay, we can see that is 45.1 is a blue strong range breakout chance. Got the charts open. Again, I'll show you the normal H1 template that when you double click opens, just overlaying the RSI. Again, just as more of a graphical representation of what the market's telling us. Okay, when we look to break through the 50% and come to the oversold territory, the market moves down. So we've then crept back up and come back within the range. But then again, we're looking to have not got anywhere really near the overbought territory. So the market looks for me as it's creeping back down. So the sentiment arrow is going to start to change. It will go obviously through the stages. It'll go to the low directional edge bias, because the market will have either have retraced back, towards the top of the range and fill in this Bollinger Band gap, or it continue to move lower, break support, and be testing the lower end of the Bollinger Bands. Now, from this particular setup, that looks what's more likely to happen. So as it moves through the sentiment, remember, it increases in its strength, in its overall direction. So right now, we're in the blue. So we're waiting for that break to happen. So again, you have to tie in your particular bias, your particular view on fundamentals, and then trade accordingly. So we can see on the 15-minute chart that there's been a fairly hefty sell-off. The market has recovered and then aggressively sold off, breaking through some big levels. So realistically, it looks to me that we've rejected on the hourlies the 50%. So it looks to me as the bear sentiment is taking over here. So you want to be selling into this particular breakout chance, and you've got a nice level here. The low end of short-term support almost ties up with the 1.9735 daily resistance. Okay, so we break that daily resistance, the market's going to look to test the low end of the Bollinger Bands, take out all these lows here, and potentially get down to the daily. Fourth resistance point, which is located at 1.9553, and that would tie in with the pattern we've seen on the RSI. They want to get back to that oversold territory, so the sentiment is going to change to low edge direction, because we're going to be losing that breakout chance, but then it's going to go getting back into the higher territories where the market is getting oversold. So that means that more people will sell in to a breakout before they then buy it back. So you can use other studies as always. I mean, if you take the 15-minute chart, this is a big selling candle that that kind of mirrors this green bullish sentiment we saw come in. But if you take the highest of the low, then Fibonacci in action, it is telling you that the market really is sold off. It's hit these lows here. We've hit the 50% retracement, as a strong move generally does. So the market now we've closed all at 50%, should make a lower low. Okay, so we're looking at on the 15-minute based upon that. So when we break through 1.9735, you're a seller. You're waiting for the low to be hit. Now you might not necessarily get all the way down to the next logical point of support resistance down here at 1.9553. But you've got a fair chance of the market breaking 1.9735, making a new low. So again, you may be looking, only 7 full ticks or so. But that's still, a fairly low edge trade, because we broke and held below the 50%, and that's tying up with all this volume and all this directional kind of selling bias we could have move into the market if the market does therefore break out. And again, if you look, we're trading below the moving average. Okay, we found that has been resistance. The resistance points have held the short term, so the support points, as we're in a breakout scenario, are looking to be broken. If we break through here, again, you might not be able to ride it all the way down to the low end of the Bollinger Band, or indeed back to the higher time frame levels, but a break of this point would be significant, because the RSI trading below 50 is going to take you towards the oversold territory. So on the 15-minute chart, I'll probably wait 2 or 3 15 minutes if you can to get the full extent of the move. But this is a breakout trade that's going to happen, an increase in sentiment. So that's how you trade the blue arrows, and looking for the increasing chance of a breakout to happen. And everything that I've just gone through would suggest it would be to the downside.